Good evening, everyone. This is Wayne, and this is the video version of the trade report for Monday, May 21st, 2018. Well, the market's got a bullish gift yesterday when the futures market opened, and it carried on through the Monday session. Stay tuned to find out more. Greetings, everyone, and thank you very much for spending part of your day with me as I go over the action and activity from the financial markets on Monday, May 21st, 2018. Well, we have to start out with a chart of the Russell 2000, and for the simple reason that it's just making new highs every single day. It's just making mincemeat out of the resistance levels that it encounters as well. There's an enormous amount of bullishness. In fact, I am going to make a rather bold statement here and say there's too much bullishness. There's a saying in the market. It's not really a saying, it's a dynamic more so than anything. And when a market does this, it's said to be parabolic. And when a market goes parabolic, it basically has gone too far too fast. Now, you don't get parabolic moves to the downside, you get crashes to the downside. So that's the terminology differentiation. But when a market goes parabolic, the bulls are real happy. And the people who are long the Russell are pretty darn giddy right now for good reason. I mean, they've been hanging on to this thing, and this market has been making new highs. And I mean, the problem is the psychology of a market that continues to go up is that everyone thinks it's going to keep going up. But what tends to happen is when it goes up like that, it comes down pretty hard. Now this move here wasn't as big, but it still backed off. We have not had a discernible move to the downside yet, just as a normal move back from all of this buying. I mean, there has to come a time in the not too distant future. I shouldn't say there has to, because nothing has to happen in the market, but judging by usual and customary approaches to this type of price action, you normally will get a move to the downside. And that's just in keeping with what keeps the market healthy. So, a move up followed by a little bit of a move down. Now, in all fairness, yes, we did get a little bit of a pullback here, which is great. But in the great scheme of things, it really wasn't that much of a pullback. What we look for is what's called a 50% retracement. And a 50% retracement is a Fibonacci level that is the normal order of a retracement off of a move higher. Especially when you have a move that is bigger than, and when I say bigger, I'm not necessarily saying in terms of overall points. I'm saying in terms of overall days that it's moved higher. So we basically got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We got 12 days. This move back here was 1, 2, 3, 4, 5, 6, 7 days. This move back here was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So we're right about at that. Oh, and let's count this one too. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days here as well. So we do have some symmetry. We've got 12 days here. We've got 11 days here. Or sorry, 8 days here. And we've got 11 days here. And we just made the 12th day here off of this low here. If we were to count this low, it would be 14 days higher. So we're at that point where symmetry is coming into alignment with price action. So I'm actually looking for a price to move lower. Now, my strategy session video from, I think it was Friday afternoon, Friday midday, I told you that I entered a bearish butterfly in the Russell 2000. And my thesis for that was it's come too far too fast. Well, the other part of that equation was the symmetry. And symmetry has to be taken into consideration because that's a component of price action that's in keeping with the intuitive dynamic of the market. And there are forces in the market that do keep track of that aspect of price action. So yes, I'm still looking for a move down. How long that takes for it to occur, I don't know. But the further we go up, the further we're going to fall. So that's the part of the equation that's a little bit dicier than what can really be accounted for at this point. Now, my thesis on this whole thing is, obviously, I think we're going lower. We're going to come off of our highs, I should say, in the Russell. So where is that money going to go? Is it going to go to cash? What are those who began buying down here going to do with their profits when they do start selling up here? My thesis is they're going to begin buying Dow components, S&P components, and NASDAQ components. So technology, industrials, and the broader market. So whether or not that happens, we will find out. But at the same time, we have a situation that is pretty telling. It's, in my opinion, it's imminent. So that's where I'm at on this. We'll see if it comes to pass in the next day or two. I may be doing a video here on Tuesday and Wednesday, tomorrow and the next day, talking about the Russell at new highs again. I don't know. But again, you have to have a trade thesis, and that trade thesis needs to be built upon metrics that are in keeping with what would ultimately be a high probability approach to entering a trade based on your trade thesis. So that's my trade thesis for the bearish butterfly that I entered in the Russell. All right, so that's the Russell. Now, none of the other indexes made new highs. Obviously, they're very far away from making new highs, actually. But they were all up. So we had the Dow closing up just under 300 points. We had the NASDAQ closing up just under 40 points. And the S&P 500 closed up just over 20 points. So a real big day. Futures opened up higher yesterday. They gapped open. And this is all about what Treasury Secretary Mnuchin said about the trade dealings with China. So China is now working with us. We're working with them. Things are getting handled, worked out, as it were. It was my understanding that the trade situation was pretty much priced into the market. So this move up, based on that news, has me kind of preoccupied, I guess. I'm not necessarily buying it per se. I think the market is poised to go higher, but I don't think this is really the impetus for it. I think this was an excuse. But I do think we need to kind of proceed with caution and form a base before we really begin to go higher. Now, next Monday is Memorial Day, so there's no trading that day. The market's closed. We get a 3-day weekend this coming weekend. We get Saturday, Sunday, Monday. The markets are not open. And so now, Sunday, the futures markets will open at the regular time because Memorial Day is a U.S. holiday. It's not an Asian and European holiday. Actually, I take that back. It may be a European holiday. I'll get that straightened out and figured out. I'm not 100% sure, to be honest with you. So at any rate, all I know is that Monday we don't have the U.S. stock market open. But as far as the Asian markets and the European markets, I know the futures markets will open, and we'll just see how that all plays out. So we have a chart of the VIX here, changing the subject. The VIX continues to drop. We had another low, not low print today, but we had another drop in the VIX today. And I do expect that to continue going lower. Now, we've kind of come through this quote-unquote worst of it here on the cloud, and we're beginning to work our way toward this very thin area of the cloud. This could invite a move higher, which means, of course, that the market may go lower. Now, this comes into play in the first week of June, so basically week after next. Now, that's not a guarantee. It's just an observation, and I'm looking at that and speculating that we could see some upside in the VIX, which means some downside in the market. We'll see how that plays out. We may get a slow glide to the upside, something like this, and then maybe a pop through, and then maybe a drop again. There's a lot of things that still need to be, like I said, worked out. This market is still not on pace for new highs across the board yet. Many stocks are making new highs. However, the only index, as I mentioned, as I showed, is the Russell making a new high. So the Dow, the S&P, and the NASDAQ still have a lot of ground to make up. And if we are to look at those charts, we can get a sense of where we're at. Now, the Dow did close over 25,000 today, again. And it has gone higher. It's gone above the center of the W here. Now that's very bullish. Where it resolves is up here, approximately 25,500. Now that brings us another 500 points. Now, whether or not that happens in short order, or if it happens at all, remains to be seen. But this is about as perfect of a W pattern as you find. This is a very textbook, long, drawn out, very well-formed W pattern, and they usually do resolve. It's the ones that are like this, that go up and then down and then up. I mean, just all that choppy in short periods of time that don't resolve all the time. It's these W patterns that are more thoughtful, more drawn out, that typically resolve. So we'll see. So that's the Dow. And the NASDAQ started off a lot higher today and dropped, which was very interesting. I don't know the story there, but we've got some weakness to some degree in the NASDAQ, and we do have a little bit of a pennant forming here, which is a bullish pattern when you have this type of a situation. But the price action today in the NASDAQ was not all that good. And with a pinch coming, we could find ourselves dropping toward to or through that pinch. Now, the timing on this is, let's see if that coincides with the VIX. Actually, this would be next week. So we'll see what happens. I did not like the price action I saw in the NASDAQ today. Amazon was up about 16, 18 bucks at one point, and it actually closed up 11, but it almost went red at one point today. Now, there was some news that came out of Italy. I guess the Italian bond market crashed, some crazy thing, and it pulled our market down, and everything went a little bit lower, but the NASDAQ took the biggest hit. All right, so the last market that we need to look at is the S&P, and it's stronger than the NASDAQ. It's not as strong as the Dow, and none of the Dow, NASDAQ, or S&P are as strong as the Russell. Now, it looks like we have a W pattern here, but we really don't. I mean, we've got kind of the beginning, and it looked like it was going to resolve here. We had a nice move up, but then we kind of started doing this funky sideways thing. We almost have a mini W at the end of this W, and that doesn't bode well. This is like this is what I was calling for, some consolidation. But the problem is, and I use the term problem loosely, the concern is we couldn't get back up to the 618 that we had originally gotten to back on the 14th, and we pulled back. So does this market have enough oomph to go higher? I'm not 100% certain. I think what has to happen, and I mentioned this, I think the Russell needs to sell so that the buyers who got in early will generate some cash and then begin putting the money to work in the broader market, the S&P, the NASDAQ, and the Dow. That, it seems like the Russell's getting bought because energy names are really on fire right now, and I should show you the crude oil market. And I think that's what's really driving the Russell. There's a lot of energy names in the Russell. But let me get that pulled up. And that'll be the last chart that we look at today. But CL, ticker symbol /CL, is crude oil futures, and that's what I look at. You can see for the first time since this trend line I drew that goes all the way back to January 25th, which is basically the January high, drawing it forward kind of parallel with the low trending to the high trending, we've got some movement above the trend line, which, while this is not parabolic, it kind of mirrors parabolia a little bit. We just keep going higher. Now, there was some news, I guess there was some Argentine restrictions or something on the oil production, which theoretically would put a damper on supply, which of course means there will be more demand. And because oil is extremely fundamentally based on supply and demand, it goes higher when those types of things happen. So, we look at this and we say, wow, it came up, drew back down, came up, kind of came down a little bit, and we came back up and popped up through. Now, we do have 100% symmetry resistance up here at 74.48. From a Fibonacci perspective, I would be looking for a move possibly to this 2618, which is at 73.72. Currently, we're at 72.67. So another $1.05 higher in crude oil, which, again, we would be talking about parabolia at that point. But a move up to 74.48 would really take this to an entirely new level, and I think that's where we would drop. That's where the sellers would come in. This is a huge resistance level, 74.48. And if it gets there, which still doubtful whether or not it will, that's where I think everything will kind of begin coming back down. So we'll see. There's a lot of things going on in this market that are kind of in keeping with the change of sentiment that we've had lately, ever since the S&P broke out of the downward triangle it was in, ever since the indexes themselves broke out of the downward triangles they were in, and by extension, downward trend lines. And now the Russell took it to an entirely new level, making new high after new high after new high. But markets are constantly adjusting. So, we have extreme lows, we have extreme highs, and then we have points at which we come back to normalcy, if you will. So, I'm looking at the levels, I'm looking at the extension of price action, I'm looking at where the markets could/should come back to once they've kind of gotten their yayas out. And the Russell looks like it's going to have a relatively big pullback at some point in the not too distant future. And I'm feeling the same way about oil. Now, oil does not play the same as the indexes, but it's still a market. And so when it moves higher, it will have ultimately some relief brought in, and relief in the form of selling, which comes as a natural extension of taking profits and accumulation distribution cycles. And we are in an accumulation cycle right now. So what that looks like going forward, I don't know, but we've got a few things that are a little bit extreme, a little bit tweaked, and it'll be interesting to see how they all play out. All right, well, with that, trade safe, trade what you see if you choose to trade at all. Good night and good trading.